Welcome back to the deep dive. We've all been there, right? Just staring at this huge list of online trading platforms. They're all shouting about how great they are, promising everything. It's tough. How do you cut through all that noise and find what actually works for you, what's real and what's just, well, marketing?
Oh, absolutely. It's overwhelming. So much information out there.
Yeah,
And it's not just about ticking boxes on a feature list, is it? It's about, how those features actually help you trade. What are the real benefits? What are the hidden costs? And maybe most importantly, is it secure? Is it efficient? It's easy to get lost if you don't have a clear picture.
exactly. And that's what we're doing today. We're going to cut right through it. We're doing a deep dive, really thorough and impartial, into Forex.com. We've looked closely at a detailed review, and the plan is simple. Pull out the key things you need to know. We'll look at what they offer, the good stuff, the advantages, but also, the things you really need to watch out for. We want to help you get up to speed fast on what makes this platform tick.
Yeah, the goal is for you to leave this feeling, well, not just informed, but actually equipped. We'll highlight what makes Forex.com stand out, where its strengths are, but also where you need to pay a bit more attention, especially around the different things you can trade and, this is crucial, the fees, how they charge you. Think of this as your kind of shortcut to understanding a pretty big player in this whole online trading world.
All right, let's jump right in then. With a platform like Forex.com, maybe the first big question is, what can I actually trade? What kind of instruments are we really talking about here? And what's the benefit of having them all in one spot?
Well, what's really quite compelling here is just how many different things they offer. The breadth is significant. Forex.com isn't just, a one-trick pony. It's known for giving access to a really wide range of markets. So you've got your currency pairs, majors, minors, even the exotics. That gives you huge exposure to the global Forex market. But it's not just Forex. You can also trade indices. That lets you speculate on, say, whole stock markets, which is great for playing broader economic trends, not just single stocks. And then there are CFDs on commodities.
CFDs, right. Contracts for difference. So things like oil, gold.
Exactly. Oil, gold, silver, even stuff like agricultural products. And the key thing with CFDs is you're trading on the price movements without actually having to own the physical barrel of oil or bar of gold. Much simpler.
Okay, so that wide range sounds genuinely powerful. But for you, the trader, what does it actually mean day to day? Having currencies, indices, commodities all together.
Well,
Does it change how you approach trading beyond just having more buttons to click?
oh, it absolutely can. It's more than just variety. It's really about strategic flexibility, agility. Think about it. You could be trading a currency pair based on, I don't know, a central bank announcement. Then maybe you see an opportunity in oil because of some geopolitical event. You can pivot instantly. Or maybe you want to hedge your risks across different types of assets. You can do all of that from the same platform, the same interface.
So it streamlines everything.
Precisely. It consolidates your market watching, your execution. That can be a real speed advantage, especially when markets are moving fast. It just works for lots of different trading styles and goals. And it saves you the hassle of juggling, multiple accounts with different brokers just to trade different things. It's about efficiency,
Yeah,
adaptability.
that consolidation aspect, that sounds like a genuine edge for anyone trading actively. Okay, so we've covered the what you can trade. Let's dig into the how. What's the trading environment actually like on Forex.com? What tools, what platforms do they give you? What power does that put in your hands?
Right. This is super important because the platform is your connection to the market. It's your workbench. And Forex.com, well, they do pretty well here. They offer some real industry power tools. You get the choice of MetaTrader 4, MT4, and MetaTrader 5, or MT5. These are arguably the most popular platforms out there globally. People love them for their charting, their analysis tools.
They're kind of the gold standard for many traders, aren't they?
They really are. Very robust. But Forex.com doesn't just rely on those. They also have their own proprietary platforms. These are often built to be a bit more streamlined, maybe more user-friendly for some, and they're usually tightly integrated with Forex.com's specific services and features.
So choices then. Whether you like that deep customization of MetaTrader, maybe you use lots of third-party tools with it, or you prefer something maybe simpler, built in-house. And these aren't just basic interfaces. I assume they pack a punch?
Oh, definitely not basic. These are advanced trading setups. You get sophisticated charting packages, loads of technical indicators, drawing tools, different time frames you can customize, everything you need for analysis. But what's really powerful, I think, for a lot of traders is the automated trading side. You can use expert advisors, EAs on MetaTrader.
Right, the trading robots.
Exactly. Programs that trade for you based on your strategy. It's like having an automated assistant running 245. Helps with discipline, risk management, catching moves maybe when you're asleep or away from the screen. That can be a huge plus, especially in Forex, which is a 24-hour market. Frees up your time. And of course, they've got web and mobile versions too, so you can trade or check your positions pretty much anywhere on the go.
That automation and accessibility, yeah, sounds like a real advantage.
Yeah.
Okay, beyond the platforms, there's one feature that always gets traders talking, sometimes whispering. Leverage. Forex.com offers it to 1.400. Wow. For listeners who might not fully get what that means, what is high leverage, practically speaking, and who is it really for?
Yeah, high leverage, like 1.400. It's definitely a major draw for Forex.com. But, and this is a big but, it's a double-edged sword, a very sharp one. Basically, leverage lets you control a large market position with only a small amount of your own money, your margin. So with 1.400 leverage, every $1 of your capital can control $400 worth of currency or whatever you're trading. What that means is if the market moves just a little bit in your favor, your profits get magnified significantly. You can potentially make quite large returns from relatively small price changes.
Sounds amazing. Almost too good to be true, like a shortcut to big profits.
Yeah.
But what's the catch? What's the other side of that coin? How does Forex.com help traders manage the amplified risk that obviously comes with that?
That's the critical point. It amplifies profits, yes, but it amplifies losses just as much, maybe even more dramatically because of how fast it can happen. A tiny move against you, just a fraction of percent, can eat through your trading capital very, very quickly, can wipe you out. So high leverage is inherently high risk. There's no way around that, which is why it's really only suitable for experienced traders. And I need to stress that. Experience.
Experience meaning?
Meaning people who really understand how markets work, the volatility, people who have solid, tested risk management plans, using stop losses effectively, managing position size carefully, and crucially, people with the emotional discipline to handle big swings in their account without panicking. This is absolutely not something for beginners who are still learning. It demands constant vigilance, sophisticated risk control. Now, Forex.com, like any regulated broker, will give you risk warnings, educational stuff about leverage, but at the end of the day, managing that risk is down to you, the trader.
Makes sense. A powerful tool, but definitely one to handle with extreme care and experience. Okay, so every platform has its quirks, its limitations. Nothing's perfect. We've heard about the impressive features, the tools, the leverage. What about the other side? What are the critical things, maybe potential drawbacks, that you need to be aware of with Forex.com?
Yeah, it's important to have that balanced view for sure. One significant point, especially if we're thinking about our listeners in the US, is that cryptocurrency CFDs are just not available. That's down to regulatory rules in the States. So if you're specifically looking to trade Bitcoin or Ethereum CFDs, for instance, this platform won't work for you if you're a US client. That's a potential drawback for that specific group.
That's a clear heads up for anyone interested in crypto CFDs in the US. Good to know. Beyond what might not be available, let's talk about costs. How does Forex.com actually make money from your trades? Understanding the fee structure is always critical, isn't it? Every little bit adds up.
Absolutely crucial. How do they charge you? Well, on Forex.com, it varies quite a bit depending on the type of account you choose. This is something you really need to get clear on before you start. So they have what they call standard accounts. These mostly work on the spread. The spread is just the difference between the buying price and the selling price of whatever you're trading. It's kind of the broker's built-in fee. With these standard accounts, the spreads typically start from around 1.0 pips. A pip, remember, is that tiny unit of price movement. So a 1.0 pip spread means there's that small cost baked into the price when you open your trade.
Okay, so standard account cost is in the spread you see. Simple enough. But they have other options too.
They do. They also offer commission-based accounts. Now, with these, the big advantage is you often get much, much tighter spreads. Sometimes they can be as low as 0.0 pips on major pairs. Basically, the buy and sell price are almost identical. Sounds great, right? But there's an explicit cost instead. You pay a flat commission. It's typically around $7 per standard lot traded, a standard lot being $100,000 worth of currency. So you get the tight spread, but you pay a separate fee for every trade, in and out.
Right, so two different ways of paying. Spread or commission.
Yeah.
What does that actually mean for your bottom line?
Yeah.
Can you maybe give us a quick example? Like if I'm trading small amounts really often versus someone making fewer but much bigger trades,
Yeah.
how different would my cost look on each account type?
Yeah, that's exactly the calculation you need to do based on your own trading style. Let's try that hypothetical. Say you're a small, frequent trader. Maybe you do 50 trades a month. Small ones, like port 1 lots each. That's a total volume of 5 lots, or $500,000 traded in the month. On the standard account, with that 1.0 pip average spread, let's say on your USD, that might cost you roughly $500 over the month, just in spreads. $10 per pip per lot, 1.0 pip 5 lots. Now, on the commission-based account, for the same 5 lots traded, you'd pay $35 in commission. 5 lots, $7 per lot. Plus, you'd have the near zero spread. So in this case, the commission account looks way cheaper, doesn't it?
Big difference there for the frequent trader.
Right.
Okay, what about the other type?
Right, let's take the larger, less frequent trader. Say they do just 5 trades a month, but each one is a full standard lot. Still the same total volume. 5 lots, $500,000. On the standard account, spread cost is still roughly $500. On the commission-based account, the commission is also still $35. 5 lots, $7. So again, in this scenario too, the commission account seems more economical because of those tighter spreads, saving you money implicitly.
Okay, so it sounds like commission is often better. Or is there a catch?
Well, the general takeaway is often that for higher volume traders or those trading larger sizes, the commission account with its tight spreads usually works out cheaper overall. The catch might be if you're trading really tiny amounts, like micro lots, very frequently. That fixed $7 per lot commission, which scales down for smaller trades like $0.07 for 0.1 lots, might still add up. You just have to run the numbers based on your own typical trade size and frequency. Do the math. Fixed fee plus tight price versus variable fee built into a wider price. It's a classic trade-off.
That's super clear. Really highlights why knowing your own trading habits is step one before picking an account. Thanks for breaking that down.
Okay, so beyond the trading itself, the platforms, the costs, what's holding it all together? What about the foundations, regulation, security? What kind of confidence can you have in Forex.com? Now this is where Forex.com really stands quite strong, especially in a market that can sometimes feel a bit Wild West. Regulation. They have a very strong regulatory framework. They're regulated by multiple top-tier authorities around the world. We're talking the CFTC and NFA in the US, the FCA in the UK, ASIC in Australia, and others. Having that kind of multi-jurisdictional oversight is a really big deal. It's not just a logo on a website.
What does that mean practically for you as a trader?
It means they have to follow strict rules about how they operate, how they handle your money, crucially. Keeping client funds separate from their own company funds. That's vital protection. It also means standards for fair pricing, for how they execute trades, and processes for resolving disputes if things go wrong. It just builds a much more secure, trustworthy environment to trade in. It's a critical safety net.
So it's not just about the shiny features, but having that solid, regulated foundation. Peace of mind.
Exactly. Peace of mind is huge in trading. And tied into that, they also invest quite a bit in educational resources. It's not just token articles either. They have a pretty comprehensive library, tutorials, webinars, market analysis for all levels, from beginners to advanced traders. Whether you need to learn basics of technical analysis or want insights on, say, macroeconomics affecting currencies, the resources are there. So it's this combination: strong regulation, solid platforms, and a commitment to helping you learn. It's about empowering you, not just giving you access.
Okay, so let's wrap this up. What does all this mean for you, the trader listening right now? Let's quickly recap what we found at our deep dive on Forex.com. On the one hand, you've got this really broad range of things to trade: Forex, indices, commodity CFDs. Gives you lots of options, lots of agility. You get access to top-tier platforms like MT4 and MT5, plus their own stuff, loaded with tools, even automation. And for the experienced traders out there, that high leverage, up to 1.400, is a major feature, letting you amplify positions.
But, and it's a significant but, you've got to keep those other points firmly in mind. If you're in the US, remember, no crypto CFDs. That's a regulatory thing. And that fee structure, it's nuanced. You've got the spread-based standard accounts versus the commission-based ones with the tighter spreads. You absolutely need to figure out which one fits your trading style and volume best, because as we saw, it can make a real difference to your costs, especially for smaller or very frequent trades.
So thinking about that strong regulation, the good educational support they offer, here's a final thought for you to consider. How do you personally balance those attractive features, the high leverage, the wide range of markets, with the absolute need to understand the fine print? The details of the fees, the regional restrictions. It's a powerful platform, no doubt, but it clearly demands you know what you're doing and you've read the details.
Absolutely. And ultimately, while we hope this deep dive has given you a much clearer picture, remember our sources always stress this point. Getting personalized advice is really smart. Consider talking to a qualified financial advisor, someone who understands your specific situation, your risk tolerance, your goals, before you jump into making significant trading decisions. Trade smart, trade informed, that's the key.